I think you know by now the banana zone has started, and that's the silly season in crypto when prices start to go mad. And we have one job here, and that's not to fuck it up. And I'll explain a little bit about that. But first, the bigger picture. You see, we're on this journey. Today, crypto's a $3 trillion asset class, but I think it's going to 100 trillion by, let's say, 2032, 2034. So within 10 years, it goes to 100 trillion, which will be the largest, fastest accumulation of wealth in all human history. Now, my job here is to help you navigate that. I want you to all make it to the other side. I want you to make money and unfuck your future.
The first principle? Avoid leverage. Leverage trading, while tempting due to its promise of amplified returns, exposes investors to devastating risks during pullbacks. A wrong move can liquidate positions, permanently removing investors from the game. Leverage is for experts, Raoul asserts, advising most people to steer clear and focus on preserving their holdings. During bull runs, it's easy to feel inadequate seeing others claim outsized gains. This often leads to impulsive decisions, like chasing the hottest tokens after they've already rallied. Raoul warns against this behavior, which typically results in buying high and selling low. Instead, he advises sticking to a well-thought-out strategy, emphasizing that the crypto market's overall growth means there's no need to chase every trend.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
But first, let's look at the principles you all need to understand about don't fuck this up. I sent this tweet out in January 2024, and I maintain that this alone will help you. So this tweet says, remember, no leverage. So what that means is if you start borrowing money against it by using perps or other means, you have a risk of losing your coins if you get something wrong in a pullback. And then if you lose your coins, you're out of the market and you have fucked this up. So please don't use leverage. Leverage is for experts and shorter term traders and people who really know what they're doing. Even then, I personally never use leverage. My job is not to lose my coins. Secondly, no FOMO. That's the fear of missing out. You see, when things get crazy in crypto, somebody on Twitter or one of your friends will be making more money than you. In fact, it looks like everybody's making more money than you and you don't have the right trades and you're feeling terrible about yourself. That is just the engagement trap that is Twitter or the boasting of your friends. You don't get to see the trades that aren't working for those people. Now, really what it's about here is not doing stupid things. So not suddenly FOMOing into a trade because something else is going up more than your coins. That's an easy way to lose money because you end up usually getting into a trend too late. It then reverses, you've then lost money, you then try and get back into your old trend, your old trade, that starts outperforming and so on and so forth. It's a mess. Don't do it. The other really crucial one is only have 3 to 5 of the top assets in your main holdings. This is to de-risk. You see, the space is going to go up plenty. You don't need the fastest horse in the race. You need just good, fast horses. So for most people, just Bitcoin is good enough. Or maybe you want Bitcoin and Solana, because Solana has been, the blockchain with the most network adoption this cycle. Or maybe you have Bitcoin, ETH, and Solana. And then maybe you want to go a little bit further out the risk curve, whether it's SUI or Celestia or Say or whatever that one is for you. But remember, don't have that as your main holding because, again, we don't want to fuck this up. And the others are proven over time. They have Lindy effects. They survive. And I want you to survive. The other thing here is self-custody. You see, exchanges can blow up. Now, we've got much bigger exchanges and they're super high quality. Coinbase and Kraken, etc. They've proven themselves over time. But generally, the magic of crypto is it's an asset we can self-custody. So that means nobody can take it away from you if something goes wrong. And I think that's one of the key use cases. Now, if you're new to crypto, don't worry about that yet. First buy your crypto, store it on an exchange, and then go out and buy something like a ledger device and figure out how to use that. That stores your pass key for your crypto in a safe and secure way, so nobody else can get access to it. But again, you need to be really careful where you store your seed phrase that gives access to that. But what it allows you to do is it becomes portable. So if you have to leave a country, have to move around, you can then hide the seed phrase, hide the ledger device, and you're in control of your own assets. That's a really key thing. Having been through the European crisis where they took all your money out of the banks, I think self-custody is incredibly important. You may not think so now, but one day it will be. You know, people lost a lot of money holding it on FTX, for example. Again, that's the reason I like self-custody. Now, for those of you who have more tokens, then you get into a multi-sig world where you have multiple signatures, so nobody can move it without a consensus group of people agreeing to that. So that's the next stage forward, whether it's Gnosis or a number of others that allow you to do that. So those things are important. Don't lose your tokens. The small degen bag, that's another key thing, is we all have the inner gambler in us. The emotions run high when crypto's exploding. I get it. It's fun. It's exciting. And before you know it, you're switching out of all of the things you should be holding, your Solana, your ETH, your Bitcoin, your SUI, whatever it may be, and you are holding tons of meme coins, going out the risk curve. These are definitely going to 20x, 50x. And before you know it, they don't. Or you get caught when the tide turns. Don't forget, with memes, you're trading attention. And attention can be persistent, but mostly it's not. It lasts for a period of time and then it dies. And before you know it, you're holding the bag with a bunch of losses and you fucked up the cycle again. Please don't do that. I say it all the time. Friends of mine do it. Please, please, please keep your degen bag relatively low.
Crypto's meteoric rises often come with sharp pullbacks. Raoul advises investors to anticipate these fluctuations, noting that 30 to 35% corrections are normal even in strong bull markets. To mitigate stress, he suggests taking lifestyle chips off the table. This involves selling a portion of holdings to fund meaningful life goals, such as paying off debts or making major purchases. By doing so, investors gain financial security while still participating in the market's growth. Another crucial point is to avoid overexposure to risky assets. The allure of meme coins and speculative tokens can be strong, especially during euphoric phases. However, these assets often lack staying power, leaving latecomers holding significant losses. Raoul's advice? Keep speculative positions small and prioritize long-term winners.
Now, you might want to rebalance it if it does well, if you've chosen well, or you can keep running it. It depends, it's up to you. But again, just remember, don't overstay your welcome in the really risky stuff because you will end up losing money. The other key thing, the actual real hack to all of this, is just hold for a long time horizon. Just holding means you don't do anything. It's very difficult to make mistakes. You're self-custodying, you're not trading, you're not trying to scalp anything, you just hold it. And guess what? Over time, Bitcoin's done about 150% a year, including 3 kind of 70, 80% drawdowns. And by doing nothing, you just compound the returns over time. I like to add to my bags into the big cyclical sell-offs, that once every 4-year down cycle. I like to add, and then your holdings compound and you make more and more money each time. But just have a longer term time horizon. For sure, look at the hourly charts. It's fun. I've got them up all of the time, but I don't trade them. I just hold. I barely do anything. I make a couple of asset allocation switches in the entire cycle, and that's it. And magic happens, and it stops you fucking it up. So try your absolute best not to do anything with your main holdings. Also, zoom out. This space is all about noise. It's called FUD, fear, uncertainty, and doubt. You'll find that somebody somewhere is trying to scare you, telling you it's a scam, telling you it's going to collapse, telling you something is going to happen, the Chinese are going to do something, the Russians are going to do something, something's going to go to war. You know, all of these things are going to come across your screens every day. and they will make you feel insecure. Remember, this is noise. This is an adoption of technology. And if tomorrow is going to be more digital than today, we will use blockchain rails for proof, for social proof, consensus proof of value, of transferring assets, of holding assets. Everything in a digital world is going to require blockchain rails. It'll be equity markets, bond markets, currency markets. It'll be art. It'll be tickets. It'll be anything, any contract is better on the blockchain because you don't need a trusted third party because the consensus mechanism allows everybody to trust it. So over time, the adoption of Bitcoin is huge. In fact, it's still growing at twice the speed of the internet. Back when the internet was in its early days. So something that grows at that speed also goes up in price. So zoom out, remove the noise. If tomorrow is not going to be more digital than today, then start worrying. You can also worry at some point about the big cycles. So 2026 is likely to be a down year. Will that happen? I don't know. Most likely. Now, you can either hold on through the down years and keep adding and increasing the value of your portfolio, or you can unload some risk. And we'll talk about some of that. Don't forget, en route, make sure you take some lifestyle chips off as well. This is a really important concept. I've got another video on this, but lifestyle chips are the ability to take off some profits in things that really matter to you. So if the markets turn around, you don't time the top properly or whatever you're trying to do, you've paid off a mortgage or you bought the car or you've bought the holiday, you've done whatever it is that you need for your own life. And you're going to hate selling out when you have to take some lifestyle chips off. But at the end of it, your future self will thank you massively. So make sure you think about that. The time for lifestyle chips are somewhere between December and March. We will obviously get more volatility in the space. Expect 30% pullbacks frequently, maybe 35%. These will happen. Maybe Bitcoin goes to 100,000 and then pulls back to 70,000 and goes up. Don't freak out about it. It's really normal. But remember to take some lifestyle chips off at some point. Then you're just going to have this sense of security that you can run the trade longer. You can't just leave it all in and hope that you get it right. So again, I'm trying to save you from yourselves here.
Raoul underscores that crypto's growth is part of a larger trend, the digitization of our world. Blockchain technology offers unparalleled transparency and efficiency, making it ideal for various applications, from financial markets to art and supply chains. As adoption accelerates, the value of blockchain-based assets will likely rise exponentially. This transformative potential is reflected in Bitcoin's adoption curve, which is outpacing the early internet. Despite occasional setbacks, the overarching trend points to widespread integration of blockchain into everyday life. For investors, this means tremendous opportunities, but only if they can avoid getting derailed by short-term noise.
Please like and subscribe my channel.